Something's happening in the XRP market that we haven't seen in months, and the AI is picking up on a very specific pattern that could mean big moves ahead. Let's break it down. So here's where we are right now. XRP is sitting at $1.1336, down about 1.49% in the last 24 hours. Now, I know that might not sound exciting, but you know what I've noticed? Sometimes the most interesting opportunities come when things look a bit quiet on the surface. The RSI just hit 40.04, which means we're getting close to that oversold territory that, well, let's just say smart money tends to pay attention to these levels. Here's why this technical picture matters right now. That RSI at 40 is telling us one story, but the MACD is whispering something else entirely. It's sitting at minus 0.0382, still above its signal line, and that little histogram is actually positive at 0.0100. What does that mean? Well, it suggests we might see a short-term bounce, even while the bigger picture looks bearish. The Bollinger Bands are showing XRP moving from the middle band down toward that lower band at $1.0477. Here's the thing. When you combine an oversold RSI with a price approaching the lower Bollinger Band, that's often where reversals like to hide. Now this is interesting. The one thing that's really moving markets today is dollar strength. The DXY is sitting pretty at 100.95, and XRP has this minus 0.55 inverse correlation with it. But here's what caught my attention. The correlations with traditional markets are getting stronger. We're seeing minus 0.68 with the S&P 500 and minus 0.65 with NASDAQ. What this tells me is that when stocks do well, money flows out of crypto, and when stocks struggle, crypto might actually benefit. It's like the market is treating XRP more like a risk asset than a currency right now. On the regulatory front, there's actually some positive movement happening. Senator Bill Hagerty has been talking about the Clarity Act on Fox News, and the crypto community is taking notice. This could be really good for XRP long-term. Also, the CFTC is mapping out paths for decentralized futures platforms to operate legally. If this regulatory clarity keeps improving, well, let's just say XRP has been waiting for this kind of environment for a long time. The mood right now is, pretty intense, actually. The Fear and Greed Index just hit 14, which puts us in extreme fear territory. Now, I've been watching these markets for a while, and you know what I've learned? Extreme fear is often when the best opportunities show up. When everyone's scared, that's usually when prices are most attractive. XRP search trends are only at 26, which means most people aren't even paying attention right now. The big players are doing something interesting. Whale transactions are making up about 20% of all XRP trades, but by volume, they're basically the entire market at 1.177 trillion XRP. Here's what really caught my eye though. CryptoQuant is showing XRP outflows from Coinbase at their highest since April. But wait, there's more. This Japanese gaming company called Gumi just announced they're consolidating $90 million worth of XRP. That's not small money, and it suggests institutional players are still accumulating even while retail is scared. In plain English, we're in what the Elliott Wave folks call a C-wave correction, and the Wyckoff analysis is showing we're in a markdown phase, stage B. Sounds complicated, but it basically means we're in the part where big players are finishing up their selling before the next accumulation phase begins. The confidence level on this is 59%, so it's not a guarantee, but it's pointing toward lower prices in the short term before a bigger move up. So what does the AI think? This is where it gets really interesting. The short-term prediction for tomorrow shows a drop to $1.1047 with a 75% probability of more downside. But here's the twist. The 7-day prediction is calling for a surge to $1.7996 with an incredible 98.7% upward probability. That's almost $1.80, and the 30-day target sits at $1.7277 with 65% upward probability. This pattern suggests a classic V-shaped recovery, where we get one more dip before a strong bounce back. But here's what could go wrong. All 7 XRP ETFs just saw outflows totaling $20.3 million, which shows institutions are still pulling money out. Also, that dollar strength we talked about could keep pressuring XRP if it continues. The biggest risk, though? We're seeing most of the trading volume concentrated in whale transactions, which means a few big players could really move the price either direction. All right, here's my take based on what the AI is showing us. I'm leaning toward a staged accumulation strategy. The pattern is pointing to one more dip before a significant recovery. My primary entry target would be around $1.10, which aligns with that short-term AI prediction. If we get really lucky and see more selling, a secondary entry around $1.05 near the lower Bollinger Band could be even better. For risk management, I'd set a stop loss at 95 cents, because if we break that psychological support, this whole thesis is probably wrong. The target? Based on the AI's medium-term prediction, I'm looking at $1.75, which would be about a 59% gain from current levels. The key here is patience. Let the market come to you. That's it for today. Remember, I'm just looking at AI data and sharing what I see, not giving financial advice. If this analysis helped you understand the market better, hit that subscribe button and give it a like. See you next time, and stay safe out there.